Welcome to Real Estate Radio Live, an informative and engaging podcast discussing everything you need to know about the world of real estate. Your host, Joe Caccera, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, Joe Caccera.
Welcome in, Joe Caccera with Real Estate Radio Live. Thank you for those that are following us on live feed on Facebook. I appreciate that very much. We continue to try to grow the audience in any way we can. This is a podcast, however, we do the live feed on Facebook so that we could really get more exposure to the audience and get them as much education as information as we can. That's the goal and objective. I'll say it on an ongoing basis, and for those that have been following the show for almost 8 years, the focus is the same. It's education information. So we work real hard here at Real Estate Radio Live to provide you with great guests, content, information to help make you a more wise consumer when it comes to real estate in general. And so we'll continue to do that. And I'll also remind everyone what I never want to be is a show that just gets on a podcast or radio show and talks about what's in the news or talks about statistics or, give an opinion on what someone else thinks. I'll also have a lot of my own opinions on this. I study this information on a regular basis as it is the real estate and lending business in general. So I have a lot of my opinions on it, and I do research every day. And I want to try to pass that on to the consumers. Most of you know, too, we expanded the show, and we're doing a couple of different shows. One is on startups with Jack Russo. We do that typically on Thursdays if he's in town or if my schedule permits. And the reason for that is just this really strong interest with startup companies in Silicon Valley. And a lot of people are interested in starting companies, and they're interested in different phases of it. So last year we did starting something new. That's starting a new company in Silicon Valley. And this year we're doing growing your company, which is a different aspect as well. And we're continuing to do that, if we can, at least once a week as well. For those that have not downloaded the podcast, please go to RERL-1631-What's, or you could always go to iTunes, go anywhere online and just type in Real Estate Radio Live. By doing that, you could get the podcast and download the podcast and follow the show, listen to it at your convenience. The topic today is what is an iBuyer program and where are the buyers? So there's really two parts to this program today. The first part I'm going to spend educating those that aren't real familiar with this iBuyer program that you're hearing about. You're probably, if you're a consumer, you're probably hearing about it less. But if you're in the real estate industry, if you're a lender, if you're in the real estate industry at all, you're hearing about this iBuyer program. So I'm going to explain what that is for those that don't really know what it's about, all the different variances of this iBuyer program. And then for the consumer, what does it mean for you? Because the consumer worries less typically what's going on in the industry, any industry for that matter, until it comes time for them to either buy or sell a home or finance a home, or refinance a home. And then all of a sudden the consumer wants to educate himself a little bit more on, what are the best products, pricing, service, where can I get these? Where can I find them? And the other thing is the consumer wants to know is what's the latest fad or what's the latest trends, I should say, not fads. What are the latest trends in the industry? And you'd be surprised when I go to functions, when I speak at different events, when I was just at a couple of functions last week, and I heard a couple of people come to me and they asked me, what is this iBuyer program? Or what about these real estate companies or the Zillows or their Open Doors of the world buying the home outright? So I'm going to talk about that. It's a different concept. It's a different model. So you should try to better understand it if you're both in the real estate industry and as a consumer as well, because it affects you both ways as well. So anyway, the iBuyer program, and that's what I'm going to talk about in the first part. The second part of the show, the question I put out there is where are the buyers? So I'm going to explain to you, I think, where the buyers are. And what I mean where are the buyers, they're kind of missing right now in a market where we saw an incredible surge in homes flying off the market the last 3 or 4 years in a really, really strong seller's market. We thought that we'd have evolved and automatically it would be a strong buyer's market, but the buyers are taking a back seat. The buyers are, taking a breather. They're decompressing a little bit, and there's several reasons why they're doing that, I believe. And so I'm going to share that with you on the second part of the show. So let's dive into this iBuyer program. So what the concept, you could look it up, the iBuyer, really, you have to give the credit if you're going to talk about it. You have to give the credit, I think, to the company called Opendoor. So Opendoor was one of the first really industry leaders, and their concept is this. Their concept is kind of like this. They'll tell you, if you want to buy a home or you want to sell a home, we will either buy the home for you, and then you get the financing, and then you could buy it from us if you want to make a cash offer. So if you're a buyer and you're afraid of the market in terms of losing out on an offer, and your real estate agent or someone comes to you and said, listen, the only way you're going to get this home if you pay cash for it. Or maybe the only way you're going to get this place to pay cash if you're going to get a deal on it. So in some cases, it doesn't happen all the time. In Silicon Valley and really, really strong markets are different. This is an anomaly. This doesn't happen all over the United States. But so this program really was born out of the idea of this. Instead of, as a seller, instead of retaining an agent, putting your home on the market, getting it ready, doing your landscaping, holding open houses, going through all the process, getting your marketing material, putting the stake in your lawn, having people come to your home. So this is what the iBuyer program, this is what the Open Doors of the world, they tell you. Say, listen, instead of going through all that, let's just talk about making an offer for your home. We'll buy it outright. So if you think you could get $300,000, we'll take a look at it. If we think $300,000 is a fair market price, we're going to write you a check for $300,000 today. You're done. And guess what? With that $300,000, now you don't have to wait to list your home, put it on the market, wonder if it's going to sell, put money into getting your house ready, keep your house all up to date so when people are walking through your home, it looks nice and it shows nice. So these are all the benefits that the iBuyer program will promise. Okay, so this is a new concept. It's when you think about it, it's a very capital intensive concept, because if you have a company that's out buying homes on your behalf or selling homes, or if you think about it, they're really the bank and the real estate agent all at once. If someone's going to offer to write you a check for $300,000, that money's coming from somewhere. Where that money's coming from is they've raised over $1 billion in investments. So Opendoor, for example, has raised over $1 billion, I believe, over the last several years to really build up a war chest to be able to perform and function in this iBuyer program. So in essence, that's what it is. I'm going to go into some more details, but just to make sure I'm clear, so I hope that I'm clear, everybody understands. If you hear someone say, oh, what's an iBuyer program, really what it means is they believe that within a few clicks, whether you're online or you're on the phone with someone, within a few clicks or decisions or information, we will buy your house or sell your house. We'll write you a check for it. And there's no need to go through the traditional process of buying and selling a home, the way we see it today, or most of us see it today. So that's, in essence, the iBuyer model. So, just like anything, when it's new to the market, there are different reactions, right? So the industry initially reacts, which is very typical. It's denial. I've seen this happen in different industries before. You have a new kid on the block, so to speak. They come in and they have a lot of money, and they're using some technology, and they're shaking things up. And typically the first thing the industry says is, this will never work. People won't do this. This will never work. People won't do this. And this is what we heard a couple of years ago. And again, credit to companies like Opendoor and OfferPad, a couple others that started this process a couple of years ago. Credit to them that they stuck with it, and give credit where it's due. So credit to them that they stuck with it. This is their program. So in general, the industry had a tendency to really say, this is not going to work overall. It's something new. Consumers will never go for this. That's always a typical response when something comes out new. And then the reality sets in, and people sit back and they watch. And then what happens after a year goes by, or a year and a half goes by, or 2 years go by, they're seeing someone having success with something. This is the way life works. Most of you know. Someone comes in the industry with something new. Most people will complain about it because they're nervous. There's some insecurity on whether it's going to affect my job, my pay, my commissions. And I understand it. It's all human behavior, right? We all understand it. So that's what happened. And then as we fast forward now a couple of years later, they're buying and selling thousands of homes. Thousands of homes each year. And they're growing. They're opening new markets. So obviously there's something to this, right? When you see momentum, when you see traction, when you see percentages. Now, percentage-wise, someone might say, well, Joe, what is the percentage of the iBuyer market based on or compared to the traditional buy and sell market with agents? It's tiny. It's small. I think it's less than 7 or 8%. So it's small. But here's the point. 7 or 8% of a multi-trillion-dollar market, multi-trillion, not billion, trillion, annually, is a big piece. And it starts chipping away and deteriorating away the traditional business models. So you think 6, 7% is not that big of a deal right now of a market. That's true. That's tiny, right? But remember, these investors, these companies, they have hundreds and hundreds of millions of dollars, in some cases billions of dollars, to continue to chip away, to disrupt. This is not going away. This is why I'm going to continue talking about it. I see it. I study it every day. So you may say 6 or 7% is not a big deal right now. That's true in the big scheme of things, and just kind of turn your head and avoid it. But don't be surprised if 4 or 5 years from now it's 20, 25%, 28%, 30%. Those are big, big numbers. That's a big chunk out of a market. So let me talk a little bit more about the details of this iBuyer program that some people may or may not know. I've given you the positives, right? Anytime you're doing an analysis, people will typically say, take a sheet of paper. On one side, write down the positives. On one side, write down the negatives. There's always positives and negatives. So I just explained the positives to you, and I explained the marketing and the conversations an iBuyer personnel would have with you. They would tell you, again, real quickly, why sell your home or buy your home traditionally? Let us pay cash for your home. You don't have to deal with title, escrow, listing your home, people walking through your home, all that stuff, right? So that's the upside. That's the benefit. That's what they'll tell you. Here are the things that they won't tell you and that are kind of underneath the hood, disguised a little bit, that you need to know as well. So in my opinion, this iBuyer program is taking shape and having some traction in markets where home prices are lower. And let's call it $400,000 or less, okay? And some people might be listening to this show that has a home for $400,000. It's a mansion somewhere in Wisconsin. They're thinking, are you crazy? But it is true. So one of the reasons why this program is having more success, and they're smart enough to start in these programs when the average home price is maybe $200,000 to $300,000, okay? The reason why is that those are easier decisions for people, number one, okay? Different markets, number two. And number three, people that have a $200,000 or $300,000 home, I know it's all relative, but the percentage of what it costs to sell and the transaction fees and the commission fees are fairly small. Now, someone might say, well, Joe, it's all relative. It is in general, but when you're comparing a $200,000 home to a $2 million home, and the cost traditionally to sell a $2 million home is if someone's telling you 6%, $180,000 or $120,000, right? So if someone's telling you it's going to cost you $120,000 to sell your home, the cost to sell your home is almost as much as the home for $200,000. That's why there's a distinctive difference. So in my opinion, it's going to be more difficult for the iBuyer program to get any traction where you have home prices are, $800,000-$900,000 or above. And the reason why is most people will want to see what the market bears. Very few people, unless they're in trouble, unless they're confident about the price they're going to get, very few people like the idea of taking an offer off market. Typically, they want to let the market work through the price of this home and see what the market bears for this home. So people are very skeptical in this area when it's a strong market and it's a very desirable market and the business market's so strong and the business industry here is thriving, it's a different environment, just like it is in New York, just like it is up in certain areas of Seattle and Oregon now, just like it is in certain areas of LA, San Diego, some of the higher cost, expensive areas. It's different. So we'll see how that bears out. The other thing you need to know about this iBuyer program that most people won't talk to you about and don't know about because they haven't done the research on it is in many cases it's more expensive than a traditional model. Someone might say, Joe, what? Wait a minute. Wait, hold on. How is it more expensive than a traditional model? It is. Let me just tell you, the statistics will bear out that the average iBuyer program is costing somewhere between 8 and 10%. It's costing somewhere between 8 and 10% of the purchase or sell transaction that we're talking about. Okay? A lot of people won't explain that to you. A lot of people won't disclose that to you. A lot of people don't want to talk about that. Matter of fact, you got to dig deep on any of these websites to find out what the cost is. There's nothing for free. Absolutely nothing for free. Someone is either doing something because they're getting offset some revenue from a partner or something else, but no one long-term could sustain a business model when they're doing something for free and they're collecting no revenue from it and making no profit. That could happen for a while if there's long-term promise in it, but that's not the case. So one thing to understand, if any of you get involved with this iBuyer program and someone's telling you how great it is, and there's some great features to it, don't get me wrong. I'm objective in this. I'm in this industry, and I know it's changing, and I think people are foolish in this industry if you don't educate yourself and you don't understand what model you want to embrace and what model you want to move forward with. I think you're making a big mistake. And for consumers, it's good for you to understand this when you start engaging in people. As always, I would say, give me a call. If you have more questions about iBuyer or technology, what's going on in the industry, is something really a scam? Is it really true? Is it not true? Always feel free to call me. I get a lot of calls and emails during the week about this kind of stuff. Continue to do that. I'm happy to help. So understand, if someone engages you and they're talking about this iBuyer program, have them give you something in writing and have them explain exactly what the costs are going to be. The other reason why this program has some momentum is, and a lot of people don't want to talk about this, but it's true, and I'm not saying it's a large percentage, but a percentage of this iBuyer paying cash for a property is flipping. It's flipping business, ladies and gentlemen. They disguise it as something else, but let me tell you what happens. Most of you know about flipping, right? The traditional flippers, investors go out, they buy a house, they buy it hopefully for less than market, they go in, fix it up, turn it back, put it back on the market, flip it and turn it and make a profit. Most of you know the flippers. This is just a different form of flipping, the iBuyer program. Now, again, it's not all the programs, okay, but a percentage of these iBuyer programs, they're flipping properties. What they do, in essence, is they'll buy the property from you. Let's say it's $300,000, right? You accept it. Boom, they write you a check for $300,000. What do you think they do with that house? I'll tell you what they do. They hold them for anywhere from 60 to 90 days typically. They want to try to resell it. Ideally, they want to try to resell it at a profit if they can. Sometimes they go in and they put a little money into it. They refurbish it depending on what the risk and reward is on the ROI, the rate of return, right? So this is not as easy as it seems and as simple as it seems. So understand that some of these programs, when they talk about, you know, we did 6,000 transactions last year under the iBuyer program, let's say, right? But what they won't tell you is they probably won't break it down. Of those 6,000, how many were flippers? How many of those 6,000, was it 1,000? Was it 500? Was it 3,000? How many were fix and turns and flips? How many of those homes did they buy? They turn around, put a little bit of money into them, put them back on the market, and sold them for more. Now, there's nothing wrong with that. That's a business, right? That's okay. But that's not what it's intended to be. It's intended, they'll sell it as a fast, smooth, efficient program that facilitates the ease and simplicity for a consumer. That's what they'll tell you. So these are all things that you don't need to understand and be an expert at, but that's what this is what the show is for, is to really get this information out to you. share it with you on a regular basis, and hopefully you get more educated on it and you know more about this program. So in general, here's what I'll say as we finish up this iBuyer program. So it's funny, when it just came to the market, there was a lot of skepticism. There was a lot of bad-mouthing of this. It'll never last. Okay? So guess what? 2 to 3 years later, you have Open Door, who started this pretty much. You have OfferPad. Everybody knows Zillow, right? Guess who's jumped into the iBuyer program? Zillow has went in feet first into the iBuyer program. Guess what else? Keller Williams has jumped in. Other large real estate brokerages are jumping in now and reviewing it. And they're piloting it. They're demoing and piloting it, okay? What this tells you is there's a real market out there for this iBuyer program. So it's not going away. Percentage-wise, that's the one that's still up in the air. How effective will it be long-term, number one? And number two, how much market share is it capable of absorbing? I don't know. I can't tell you. I think it could always be maybe 7, 10, 12%, maybe. It could be a little bit more. I think the problem with this, I'll say it at last, with this program, which, is most markets, where you could get really caught, this program could be interesting for a lot of people, including investors in the economy, is if the market turns around, or if the market tanks, or if all of a sudden property loses 20, 30% value in 4 or 5 months. I'm not saying it's going to happen, but if it does, what do you think is going to happen with the iBuyer program if you're caught holding thousands and thousands and thousands of properties and you can't sell them? Well, someone might say, well, you could rent them. That's true, but they're not in the business to rent homes. They're in the business to keep those moving and selling them to create more capital, to keep generating more business. So that could be a problem. Keep an eye on that. That could be a problem. Anytime you're stuck holding inventory, I don't care if it's chocolate chip cookies or a 4-bedroom house, it's inventory. And if that inventory is not selling, and if you're stuck with it, if it's on your shelf or it's on your books and it's not moving, and that inventory, you paid X for it and now it's worth less. So if you paid $300,000 for a home and you're in the middle of a 90-day turn, okay, and by the time you go to put that on the market, that home is now worth $240,000. Watch out. That is the danger in this. That is the danger in the things that could come up with this type of program. But again, that's just an overview. I've given you the positives, the negatives, the potential issues around it. And so just keep an eye on it. If you're a consumer, I'll just close it out with this. If you're a consumer, check with someone who understands these programs. Call me, email me. Seriously, I'm happy to walk you through it on the phone. We could set up a conversation. You have to understand how these work, and you have to also understand the value behind them and matching apples for apples. A lot of people will explain one thing, but then when you lift up the hood and you get the tools out and you really start working, you find something else. So be careful with that. Real estate agents, I'll say to you real estate agents out there, understand these programs. Don't run from them. Don't be intimidated by them. Don't be insecure by them. Understand them. Educate yourselves on them. If I'm in this industry and I'm making a living, which I do in this industry, then educate yourself on them. Understand it. It might be a model you want to embrace. Maybe not. It may be a model that you might want to join a company that's doing this type of thing. I don't know. The point is, I think the worst thing you could do if you're a real estate agent is have this attitude that nothing's going to change. Business is always the way it is. And I've been doing business for 30 years this way, and I'm not going to change, and I don't care. That is a recipe for disaster. And I don't care who you are or the biggest producing agent you are, and it happens in every industry. It does. Look at Kodak. I could go on and on, right? Look at the industries that were too egocentric to think that things were going to change. Look at the industries that's affecting. I'm not saying things are going to change overnight, but if you're a professional and you treat this like a business, I would educate yourself on all the different models and changes and decide what you're going to do. If you stay the course and there's nothing wrong with that. But I think the dangerous part is when someone says, nothing's changing, it will never change, people will always buy houses the way they are. That is the part that is not correct. No matter what anybody says, nothing always stays the same forever. History will tell us that. All right. Before I go, I got a couple minutes. I want to talk a little bit about this market. So when I say this market, in general, the housing market is cooling down. It's slowing. It's surprising a lot of people. It is. It's surprising a lot of people because let's talk about the Bay Area. We have less than 2,000 homes in inventory in the Santa Clara County market. And general markets, that's different. You're going to have to also check at different markets that are involved or you're involved in. But in general, people thought that this market was really going to heat up. The buyers, there's a couple of things going on with buyers right now, in my opinion, and this is my opinion based on research, data, and studying this market in this industry every day. Number one, there's burnout. Okay. Number two, there's exhaustion, which is pretty much the same as burnout. And there's people stepping back going, well, wait a minute. If you could think about this, I was just out looking at houses a year ago. They were flying off the market. I couldn't get my offer accepted. There was 20 offers. It went for 10%, 20% of what I'm asking. Joe, why is that not happening right now? So understand the psychology, ladies and gentlemen, of the buyer. The psychology of a buyer right now is the reason why they're skeptical and they're standing on the edge looking around and they're waiting is because the market's changed. It's making them nervous. So they're scratching their head. They're asking real estate agents, well, John, Jim, Joe, wait a minute, Susie, what's going on here? How come that house a year ago flew off the market with 20 offers and went for 10% over asking, and now it's sitting there and they've dropped the price $30,000? So here's the psychology when this happens. The reason why buyers are standing back and they're just waiting, it's almost circling the wagons, if you could imagine this. And here's the reason why. They're going, I'm not quite sure about this. Something doesn't feel right. This is the buyer's psychology right now, ladies and gentlemen, because remember, we've been through this the last 7 or 8 years, all right? And then I'll talk a little bit about the millennial psychology. So the buyer's psychology is that, wait a minute, this is a little eerie. I'm not sure if I want to pull the trigger and write an offer on this property when it seems a bit of a ghost town around here compared to 3 or 4 years ago. So that's the psychology, just so we understand it, right? So that is the biggest reason why this market has slowed. People learn from the past. People's memories are good. They don't forget these things. They don't forget 2007. They don't forget 2009 and 2010. They don't forget those times. Here's the other thing that's happening. Now, follow me with this dynamic. What you've had is, back in 05, 06, typically the market was affecting the baby boomers and the older generation, right? And now let's fast forward 10 years later. Now you have a whole slew of millennial buyers and millennial buyers in the market looking at buying. Well, guess what? 10 years ago, that millennial buyer at 27 or 28 right now was 17 or 18. They were at home or in college watching their parents suffer through the downturn of property values dropping 40 to 50 to 60%. So understand this. So a lot of the buyers in the marketplace today watch their parents and grandparents go through a tough time in 2005, 2006, 2007. Remember when the market really dipped here, right? And not just here, by the way, all over the place. So understand that is part of the reason there's hesitation in the buyer's market right now. You have a whole new series of millennial buyers that have ingrained in their mind and their spirit and their memory bank that 10 years ago, my parents took a bath on that house. 10 years ago, my parents had to walk away from their house. 10 years ago, my aunt and uncle got their house taken away. 10 years ago, my niece, my nephew, whatever it is, they foreclosed. So understand there's a psychology around this. This is not like buying a laptop or a book. This is a major decision. And when you have major financial decisions, there's psychology that goes into it. So I will just say, I believe that the reason why we have a slowdown right now, and I think it's temporary, is because of those reasons. Number one, buyers in general are standing back going, wait a minute, what's going on? This is making me a little nervous. This wasn't like this a year ago. I'm not sure I want to jump in. So that's part of it. The other part of it, there's a new generation of buyers out there that is understanding seeing what their parents and grandparents and relatives and friends went through 10 years ago, they're going, is this coming again? They're talking to themselves, and they're talking to their coworkers and their friends and their associates, and they're saying, is this coming again? Are we in for another 2007? You see, these play a part in the dynamics of market slowdown. So that's the combination. Now, I will say this as I finish the show, because I believe in this market, and I've been doing this for 20-plus years, and I've owned real estate for 30 years, and this is what I truly believe. Saying all this that I just said, so psychologically, philosophically, I get it. I understand it. I just explained it. That's what I think. Doesn't mean it's right, but this is my thought. This is my research, my data, the stuff that I think, psychology. This is what's going on, I think. Okay, that being said, I'm telling you right now, this is a great time for buyers. Some people might say, Joe, you just said they were afraid and scared and circling the wagons. That is true. What I did is explain to you what's going on. I didn't say it's a terrible time to buy. I think it's a great time to buy. I really do. If you're going to hold a property for at least 5 to 7 plus years, it is never a bad time to buy, in my opinion. Now, if you're not sure about the property, if you're going to flip it, if you're trying to make a profit, or if you're going to be out of here in a couple of years, I'd say be careful. But if you are buying a property to live in, and your intentions are to keep that home at least 7 plus years, then I would say it's a great time to buy. Plus, ladies and gentlemen, the interest rates are low. Here's the other thing that's funny. I'll say, some people right now don't think the interest rates are low. You know why? Here again, I'll throw the psychological dynamic at you. Here we go. I'll Dr. Phil the real estate thing here. So remember, a couple of years ago, what was it, 3 or 4 or 5 years ago now, I don't remember. The rates were down in the mid-3%. You get a 30-year fix for mid-3%. Those times are gone, yes. But guess what? Rates are about 1% higher. You could still get rates in the 30-year money in the low 4%. You could still get ARMs in the 3% range. You could still do that today. So for those that think that rates went up or rates are high, I'm sorry, but that's not true. Historically speaking, rates are outstanding. So to summarize, yes, we're in a different market. It's a little strange. I explained the reason why I think it's offset. I explained the reason why I think it's slow. But I'm telling you right now, if you're listening to this podcast, or if you know someone's thinking about it or not sure, it is a great time to go out and purchase a home and buy a home. The reason why is you have some pull right now. You have some leverage right now. You do. You didn't have that a couple of years ago. Buyers, get out there, make offers, make an offer for less. Put a contingency offer together. Do something that's going to make sense for you. The last thing I'll say also on this, John Faylor and I talked about it last week, I believe. This cross program, I can't tell you enough. I'm doing a lot of these. Ladies and gentlemen, if you're nervous about putting your home on the market because you don't think it'll sell, or if you have a home right now that's on the market and you're concerned because it's not selling or you're not getting activity, give us a call. There's a cross-collateral program we're having a ton of success with. We're helping people buy homes without selling their home. And it could be done, depending on if you understand these programs. So, again, buyers, get out there. I'm being totally serious here. If you're in the market, if you're thinking about it, it's a great time to buy. It really is. The reason why is you have some leverage now. Buyers, you didn't have any leverage 2, 3, 4 years ago. You didn't. And it's going to kill me if that comes back again, and buyers, you lose that leverage. So get out there and buy. And if you're a seller, I'll say be careful in the sense of who you work with and how you list your property, because that's going to play a big part in it. Right now in a market like this, number one, work with someone that really understands real estate and does it and has a successful record in it. Number two, make sure you price your house right and you are realistic in what you're doing, but also make sure if you're selling your home and then you have to go buy another home, that you have a strategy and an approach. This is the most critical thing. A lot of people don't think about this. Don't just list your home without a strategy and a plan. List your home for what you're going to do once that home sells, and then what happens if that home doesn't sell in a period of time. That's what you should do. All right, thanks again for tuning in. Appreciate that very much. This is Joe Kuchera with Real Estate Radio Live. Take care. Have a great afternoon.
You've been listening to Real Estate Radio Live. For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Subscribe to our podcast. Discover more at RERadiolive.com.